Today, we are going to help you better understand mortgage insurance. This is According to Amber. Welcome to According to Amber. When you do a mortgage transaction, you hear about a lot of different types of insurance. You have homeowners insurance, you have title insurance, and you have mortgage insurance. And today we are going to focus on mortgage insurance. You've probably heard it called MI or PMI, and while the names all mean the same, there are definitely different ways to apply it that can actually work for you and make your loan process more advantageous. There are some myths around mortgage insurance, and today I'm joined by Candice Jorgensen, who is an account manager at Ascent Mortgage Insurance. They're a national mortgage insurance provider. So thank you very much for joining me today, Candice, in this discussion. Before we begin though, I want to make sure that our audience understands that we are talking about mortgage insurance that's tied to conventional financing. Government programs have mortgage insurance, sometimes connected with them, but the government and mortgage insurance works a little bit differently. So today we are just focused on that conventional financing. So you ready to go for it?
Yep.
Okay, here we go. Myth number one, mortgage insurance is a bad thing. I don't ever want to pay it. I don't want to have to deal with it. True or false?
False. Mortgage insurance is a vehicle for homeowners to get into a home with as little as 3% down payment. Studies have shown that if homebuyers at the median incomes and purchase prices were to save the full 20% down payment, it would take them as much as 10 years. So mortgage insurance is definitely a positive where it can get you into homeownership with as little as 3% down payment.
Cool, and we're not going to get into it too much today from the financing side or the banking side or the lending side as to why, but I will tell you that, anytime you do a mortgage, 80% is always that magic number where banks or lenders are willing to say, okay, we'll lend you 80% and take on that risk. But if you want to go any higher, then you have to have some form of mortgage insurance. And so that is one of the cool things about mortgage insurance is it does allow you to get into home ownership a lot faster.
Yes.
Right? Cool. Okay. Myth number two, mortgage insurance costs a lot and my payment is going to go up drastically if I have mortgage insurance. True or false?
False. Like you were saying, mortgage is risk-based. Private mortgage insurance, is risk-based. So the better your credit score, the better the premium is going to be for your mortgage insurance. So always good to make sure that you're considering where that credit score currently is and consulting a loan officer like yourself to look at that and let you know what financing options are available.
Good. And I would like to point out, just from my own experience, that I have had clients that have had maybe 10 or 15% down, but they've had lower credit scores. And so even though you have more down, you don't quite have your 20%, you have to pay mortgage insurance, but because your credit score isn't as good, you're gonna actually pay more than someone who maybe only has 3% down but has a super awesome credit score. So you do really have to look at what your credit scores are and be aware that that mortgage insurance can change based upon those scores. When you're calling around to get a quote, maybe about how much something would cost on a monthly payment, your loan officer hopefully will be asking you kind of where you think your credit score is and factoring that into the payment amount that they give you, because it definitely can change based on that credit score. So
correct.
Good, thank you, my dear. Okay, myth number three. Once I have gone down the path of mortgage insurance and I have it on my loan, it stays there forever. I don't ever get it removed. True or false?
That's false. Unlike FHA, conventional mortgage insurance can be canceled. And again, like we were talking, that 80% magical number, 80% loan to value, once you hit that loan to value, then you have to meet a couple of milestones provided so that you can cancel that mortgage insurance. One of those would be, making on-time payments to the property, or if you've made significant renovations to the home, and then also regular appreciation throughout the market can also allow you to cancel that mortgage insurance as well. So once again, very important to contact the current servicer that you're making the mortgage payments to and find out about your cancellation options and how quickly you can hit those points.
Well, I think that's a really good point and very relevant in today's market, in the fact that most of us that have already owned our homes have experienced a high amount of appreciation. And if you purchased your home with a very minimal down payment, and depending upon your credit score, your mortgage insurance, could be maybe a little bit higher than it needs to be. And so having that conversation with your servicer about getting it removed, I think is very important. And if that servicer, if you feel like you're swimming upstream a little bit and they're not willing to work with you, then I would recommend that you reach out to, a knowledgeable and professional loan officer that can help you navigate those waters and make sure that you have the opportunity to look at getting that mortgage insurance removed. Maybe it's time to look at refinancing, and maybe that would make a difference. So thank you. So believe it or not, knowledgeable and professional loan officers actually use mortgage insurance as a strategy to help their clients get the very best financing that they can. And it is something that you definitely can use to your advantage, and when you have chosen the combination of the right loan with the right loan officer. So hopefully this has helped you. And if you have any other questions that we can help you with, please definitely leave it in the comments below, and we'll absolutely continue this conversation online. Thank you so much for joining us, Candice, and thank you guys for watching. And remember, houses don't build communities, you do. Bye-bye.